Today we're going to be talking about why identifying the trend is critical to your trading career, and we're starting right now. What's going on, guys? My name is Jeffrey Rodriguez and welcome to another video. If this is your first time here and you want to learn how to trade using technical analysis and price action and all kind of other Forex related stuff, make sure to hit that subscribe button and that little notification bell icon so you don't miss anything. Before jumping into the charts and looking at examples of trends, I just wanted to go over the basics and what a trend actually is. So there are two types of trends. You have an uptrend and a downtrend. Uptrends are also classified or known as bullish trends, and downtrends are also classified and known as bearish trends. So anytime the market is in a bullish trend, you're expecting the market to make higher highs and higher lows. Anytime the market is in a bearish trend, you're expecting the market to make lower lows and lower highs. One of the most important things to understand when trend trading is you never want to counter trend trade. So what that means is you never want to trade against the trend. So if the market is in a bullish trend on a daily time frame, which is a perspective from a daily time frame that you're expecting the market to continue bullish, meaning it's making higher highs and higher lows, you would not want to sell that market because it's in an underlying bullish trend on a higher time frame. By you trying to sell that market, you're counter trend trading, and the market will likely not go in your favor because the overall direction from a higher time frame is bullish, meaning the market should go up, not down. So I get questions all the time. People ask me, how do you trust the trend? How do you know when the trend is forming? And I'm gonna go over all that stuff in this video, but I want you guys to understand, in order to trust the trend, you have to be analyzing from a higher time frame, meaning you can't look at a 15-minute and see lower lows and lower highs and think you're in a bearish trend. You have to look at a daily time frame first, figure out if the market is making higher highs and higher lows or lower lows and lower highs. Once you identify that, then you know the direction of the market. So if the market is bullish on a daily time frame, you should simply only be looking for buy setups in the market. At that point, you've already eliminated 50% of the problem, whether or not you should be buying or selling, because whatever the trend is on a daily time frame, that's the direction you should be trading in. So how you would do this is you want to go into the charts and you want to look at the market on a daily time frame and identify, is the market making higher highs and higher lows, meaning each high is getting broken by a new candle making a higher high. And if the market is bearish, you see the market making lower candles lower than each previous low. So with that being said, guys, let's go ahead. We'll jump into the charts. I'll show you some examples of a trend and how you can identify it on a higher time frame basis. All right, guys, so now we're looking at the charts, and for this example, I'm using Australian dollar. So AUD USD is the currency pair, and I'm on a daily time frame. And as far as this platform, this is TradingView. This is where I do most of my analysis, and I do all of my entries and executions from MetaTrader 4. So if we look at this market, we can identify that this is a high. There is obviously some level of strong resistance at this level because the market hit this level here and then rejected, and we haven't seen price come back up there. Once the market left this level, it made a low. This low here broke below this low right here, making a lower low. Once the market traded higher, we seen a lower high form, and then the market resumed to trade lower. We seen a lower low, then a lower high, lower low, lower high, lower low. So at this point, we know that we're in a bearish market. The main question that I get is, how far is the market gonna pull back in a bearish market, or how far is it going to go down in a bullish market before finding support? Well, that's going to come with time and experience in the charts, but one of the tools that I like to use for this is the Fibonacci retracement, and you can pull the Fibonacci from the high to the low of the daily swing, and you can start to study where the market retraces into, finds resistance in a bearish market, and finds support in a bullish market, and then rejects and trades the opposite direction. So for this example, we could see the market traded up into the 50% level and then showed some signs of resistance and traded lower. So what you would want to do from here is you would want to study this piece of price action that's in these wicks right here, and what you can do is break this down on a lower time frame and see what the price action looks like in here on a 15-minute and hourly time frame, and you can look for different entry patterns that you want to take for when you're looking to sell the market. So this example, again, we traded up into the 50% retracement level. Now what you would want to do is mark up your next swing. So you draw it from the high to the low. It's the swing that makes the lower low each time. So this swing made a lower low that was lower than this one. Now this swing made a low that was lower than this one. Notice that price traded back up into the 61.8 and 70.5 retracement levels and found resistance right here, forming a wick, and then sold off from there. So these are the different things that you're going to want to study in order to figure out what you're looking for and when you're going to be looking to sell the market. I look for things like this to form during London or New York session. So once the market's trading into levels like this, I go into a lower time frame, like a 15-minute, and then that's where I'm actually entering the market. But my reason for entry is always different depending on what the market is telling me at that time. So you have to understand price action as a whole, and the beginning to that is understanding trend. So I'll do one more example for you guys. If we draw our fib from this high to this low, again, it's because this swing made a lower low. So we can see the market for this example traded up into 61.8. The bodies respected the 50% level, and then we sold off from there. So these little portions of price action right here, and right here, you're gonna wanna go into a lower time frame, like a 30-minute or a 15-minute, and study what price action looks like as it's hitting these levels and as the market's making this pullback. If you guys are struggling with Fibonacci and you're wondering if you're drawing it on the correct swing or not, then I'll link a video right above here, somewhere in this area. And what you can do is check that video out. I go over in detail how I use my Fibonacci and what swings you're gonna wanna focus on when drawing your fibs. So a quick little recap before we hop off of here, guys. Make sure whenever you're looking at the market that you always start with a daily time frame to identify the trend, and you just simply look at what the market's telling you. We can clearly see that the market formed a high, formed a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then recently we formed another lower high and we're trading lower, so the next objective would be what? A lower low. So after you've got your trend mapped out on the daily time frame, you're gonna wanna start drawing your fibs and identify how far the pullbacks are gonna be, where the market may find resistance and start to trade lower from, and study different things that that specific pair does at certain times of the day. So for this example, you could see the market traded up into the 61.8 and then sold off. So we've seen two examples where the market traded up into 61.8, and that may be a common theme for AUD USD. That's just something that you guys will have to study in the charts and see what that pair does. That's gonna be it for today's video, guys. Let me know in the comments below, is the daily time frame something you are already using to identify the trend? If not, leave a thumbs up if this video helped you and you're gonna start using the daily time frame going forward. See you guys in the next video.